The Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors Admiral Markets. As always, gives me great pleasure to reintroduce Mr. Darren Sinden, a market commentator for Admiral Markets. Good afternoon, you young
Good afternoon,
Darren.
Nick.
It's been a long week.
Yes, it certainly has, sir.
But market, FTSE back above 7,000, Wall Street almost at record highs again.
Yes, in fact, I think people would be slightly surprised the FTSE is not higher today, obviously above that key round number, as you say. But given the strength of US markets yesterday, you might have expected a bigger follow through perhaps ahead of the weekend, but maybe we'll see that next week.
But quite encouraging, obviously a huge bond sell-off.
Yes.
Didn't realise the Bund, for example, had corrected 33% in 3 weeks, which
quite extraordinary.
just unbelievable for a safe haven asset class.
Absolutely, yeah. You wouldn't have credited it. People would have said you were mad if you'd been talking about that only a couple of months ago. So.
Incredible. Okay, well, if you're watching for the first time, we'll go through a number of different slides. Let's kick off with the first one today. Data released over the European session. What's caught your imagination this morning, Darren?
Well, there are one or two items that took my eye. First of all, Poland Q1 flash GDP. So it's only an estimate number, but it came in at 3.5% year on year versus a forecast of 3.3% growth. So, improving numbers as far as Poland is concerned. And then if we move, it gives you a flavour of the differences within the year, because you remember that Finland slipped into recession. We mentioned that earlier in the week. So there's a two-speed economy still within the Eurozone and the EU as a whole. Then we look at UK March construction numbers that came out this morning. We look at the month-on-month number, and output was up 3.9% versus the 2.5% that was forecast. So better for UK construction, though. If you look at the year-on-year figures, it's still down, but down by a smaller amount. So it's recovering. What is interesting, if you drill down though, is it wasn't house building.
Right.
That suffered into the election. So this was output in commercial construction rather than house building. Nonetheless, the Office for National Statistics says that that construction and industrial output update could add as much as 0.06% to UK GDP. That may not sound a lot, but when you think that Q1 GDP came in at just 0.3%, any increment is to be welcomed. And then the other number that really took my eye was the Swiss Producer Price Index that came out at 2.1% on a month-on-month change for April, and 5.2% negative or minus year on year. And the takeaway from that is that deflation is still a threat to the Swiss economy. And this, the central bank's having a tough old time of it defending the currency, but also trying to try and fend off deflation. So tough times in Switzerland. At least as far as the central bank's concerned.
Understood. Okay, let's move on to the FTSE 100 movers, if we can. Okay,
well, ARM Holdings up 1.3%. That's one of the stocks that's taken my eye today. And the reason for a positive move in ARM, simply a read across from Hon Hai, or Foxconn as they're known, and they're the people, you may be aware, that put together iPads, iPhones, and alike, manufacture them. Well, sorry, assemble them rather than manufacture them, and package them up for shipping. They're packaging more handsets, more devices that contain Apple chips, and there's a straight read across into a positive return for Apple on that basis. And another stock I think that's worth a mention, Coca-Cola Hellenic. Bottling company for Coca-Cola here in Europe. The markets embraced their trading update today, despite the management being cautious, as you would expect, on the Greek operations. But the businesses in areas like Ireland and Russia too, and they're doing pretty well. So they're up 1.5%, and they were at one point this morning up 3%. So that seems to have struck a chord with investors today as well.
Understood. Okay, so let's move on to M&A rumours and movers.
Okay, right. Well, funnily enough, I've alighted on ITV today. Now we spoke about ITV yesterday. Numbers were sort of better to travel than to arrive, so the stock was down yesterday. However, City AM's gone with a story this morning about takeover rumours circulating again, and Liberty Global, who own Virgin Media, and French media giant Vivendi are two of the names that are being mentioned. Just to give viewers a flavour of how ITV stacks up, £712 million pre-tax profit it made last year, has a market cap of around £10 billion. In terms of of its clout in the UK, if you like. It controls 45.9% of UK TV advertising,
Wow.
which is a substantial
Big
market
number.
share. And 99% of commercial TV audiences that had 5 million viewers or more were broadcasted by ITV. So basically, the big family viewing numbers in the UK, ITV's basically got that cornered. The stock is up today, despite a strike actually by ITV staff. So this story sort of outweighing the negativity of the strike by ITV staff. And I think the key for anybody that wants to take over ITV would be its strong content. Obviously, programmes like Downton Abbey, they're going down a storm internationally, particularly in markets like the US, and a very strong back catalogue these days as well. So it's a turnaround story. The management, will tell you that the turnaround isn't completed, but it's been a real bounce back. And as I think I said yesterday, they're up 30% year to date. So they continue to please the city, and to take over is icing on the cake, really.
Understood. Okay, so let's move on to US data points to keep an eye on.
Okay, well, there's a few more data points today than we've had earlier this week. Empire State Manufacturing is the first off the blocks. We're looking for a read here of +5 versus a negative 1.19%, I should say, in April. So a positive number in prospect there. The other key figure today, industrial production for April. Strangely here, you won't hear me say this very often, we're looking for UNCH flat, 0% change.
Right.
Versus a 0.6% gain in March. So anything better than zero will be well received, but a negative number obviously not so. And then lastly, sort of a Marmite data point, the Michigan consumer sentiment. This time it's for May, looking for a slight decline actually, a read of 95.8 versus a read of 95.9, which we saw in April. So keep your eye on that. It's a quiet week next week actually as well for US data. So we
expect fireworks.
Yes, absolutely, yeah.
Understood. Okay, so let's wrap up with the US pre-market movers and some chart points.
Okay, well, I picked out two stocks in the pre-market. King Digital Entertainment, which viewers may be aware is the maker of Candy Crush Saga and I believe Bubble Witch. So gaming software. They reported after the close last night, but the numbers looked okay, but the guidance for Q2 2015 was disappointing, and they're down around 9.9%. Pre-market, obviously, again, these software tech stocks are generally priced for growth, and if they can't deliver, or at least can't beat last year's figures, which is what the case is with King Digital, then the market hits them hard. And the other stock that caught my eye, El Pollo Loco, that's a Mexican-style chicken restaurant chain in the States. They're down 12.25% pre the market, and again, it's a similar story. They're disappointed, but this time, in their case, weaker same-store sales for the brand, and no one likes to see declining sales in the same sort of footprint of the stores. Yep. So they're down 12.25%. And in terms of levels to watch today, so 69.65 in the FTSE to the downside. As you said, we're above 7,000 at the moment, but 7,050 is the upside level that we would need to see a break above to test back to that 7,089 level. The DAX, 11,430 on the downside and 11,635 to the upside. Quite a wide range there, but it's been such a volatile market.
Permanent fast market at the moment.
The S&P, 2,100 even. On the downside, so some round number psychology there, and 21.25 is the level to look for a breakout and perhaps to test towards new highs. And in the Dow, 18,146 to the downside and 18,290 on the upside. And currency-wise, a little bit weaker in euro dollar, so 113.34 on the downside and 114.17 our upside level. Aussie dollar remains strong, and so we're looking at 80.04 on the downside and 83.80 on the upside. For dollar yen, the yen's actually strengthened slightly, so 119.28 on the downside and 119.97, which I guess you could round up to 120 even if you preferred the round number. And cable, just giving a little bit of ground, but 157.07 on the downside and 158.10 is our upside level to watch today.
We've seen stability in the currency markets this week.
Yeah.
On the major pairs.
Yeah, I mean, you look at dollar weakness and euro strength probably as the sort of and probably a bit of cable strength as well as being a defining thing. But it hasn't been volatile. It's been pretty directional. But you know, we'll see if that can continue. I suspect in the case of cable, there's a bit of a honeymoon period post the election, and maybe that will run out perhaps at the end of the month. But
understood. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you for your continued support. That wraps up the Wall Street crossover show. Have a good afternoon, and we'll see you bright and breezy. We're back 1 o'clock on the Monday. Thank you.